Hey, what's up everyone? Welcome back to Trader DNA. In last week's video, we went all in on the mother of all indicators. And when I say all in, I mean we broke it down completely. If you watch that video all the way through, you're already on your way to becoming a market analysis master and trading like a pro with the right indicators. But today we're kicking it up a notch. No, actually, we're blasting it to overdrive. We're taking everything you learned and moving to the next level. Remember those moving averages we set up last week? Yeah, those green lines that were pure gold for short to medium term trends? We're sticking with them because they're the best of the best. Now, if you're ready to go from pretty accurate to insanely accurate, you're in the right place. We're diving into strength index trading. This strategy is designed to give you laser-focused precision in every trade you make. We're talking about pushing your accuracy to 90% or higher. How do we do it? With the dynamic duo, Hakanashi and RSI. These tools are going to be your secret weapons for leveling up your trading game. So buckle up, because this tutorial is going to change the way you trade forever. Let's get started. Did you know that by mastering this strategy, you're about to unlock 4 of the most important keys in trading, whether it's Forex, stocks, or even crypto? Let me show you how this can completely transform the way you trade. Key number 1, the easiest way to reduce market noise. Yep, I'm talking about a method so simple you'll wonder why you didn't use it sooner. After this, say goodbye to all that annoying market noise forever. Key number 2, 2 powerful confirmations that never fail to identify market trends. With this, you'll know exactly when the market is trending or just waiting around, trying to figure out where it's headed next. No more guessing games. This method makes it crystal clear. Key number 3, say bye-bye to false signals. If you've been opening positions based on bad signals, or if your trades keep failing because of inaccurate signals, you're dealing with false signals. But not anymore. Soon, you'll easily filter out those fake signals and wave goodbye to all that frustration. And finally, key number 4, crystal clear entry and exit points. This is huge, guys. Pinpointing the right moments to enter and exit trades is crucial. Think of it like pressing the launch button on an ICBM. There's zero room for error. This method makes it super simple, so you'll always know the right move. With these 4 keys from strength index trading, you're about to level up your trading game big time. No more confusing theories or complicated analyses, just straightforward, effective trading that works. So let's dive in and get started on making you a winner in Forex, stocks, and crypto. Alright, let's jump right into the first key. Key number 1. The easiest way to reduce market noise. One of the biggest headaches in trading is those wild price fluctuations that make everything look confusing, especially when you're using regular candlestick charts. But don't worry, I've got the perfect solution. The absolute best way to cut through that market noise is by combining Hakanashi candles with the green moving average lines we talked about in last week's video, the mother of all indicators. And if you missed that video, no problem. I'll drop the link in the description so you can go back and check it out. Trust me, it's worth it. Now, since we've already covered everything about those green moving average lines in detail, today I'm going to break down how Hakanashi candles work. Let's get right into it. Alright, guys, let's jump into the main function of Hakanashi. And trust me, this is going to change your trading game forever. Hakanashi is all about filtering out that annoying market noise by using an averaging method for each candle. What does that mean for you? A smoother chart where the big trends just pop out, making it so much easier to spot. By cutting through the noise, Hakanashi gives you a super clear view of market trends and directions, helping you hit those price movements with pinpoint accuracy. How awesome is that? Now here's how you can get started with Hakanashi in just 2 simple steps. Step 1. Switch your candlestick chart to Hakanashi mode. It's easy. Step 2. Check out the difference between Hakanashi and those boring traditional candlesticks. The biggest difference is that Hakanashi uses a modified formula based on moving averages instead of the regular open, high, low and close prices. This gives you a chart that's way smoother and helps you spot trends and reversals like a pro. Plus, Hakanashi charts hide all those pesky gaps and messy price data that clutter up traditional charts. Look over here, candlestick chart on the left and Hakanashi on the right. See that? With Hakanashi, the chart is so smooth, it's like a hot knife through butter, making those trends just jump out at you compared to traditional candlesticks. And that is why so many forex traders love using Hakanashi candles. They cut the noise, make trend analysis a breeze, and help you trade smarter. Alright, that's our deep dive into Hakanashi. Now, let's back to the main event. The easiest way to reduce market noise. The easiest way to slice through all that annoying market noise is by combining the green moving average lines with Hakanashi candles. Perfect! Now, market noise doesn't stand a chance, and guess what? We're diving right into key number 2, 2 powerful confirmations that never fail to identify market trends. If you're thinking, hey, key number 1 and key number 2 seem like a dynamic duo, you're absolutely right. These 2 indicators are like peanut butter and jelly. They just work better together to give you the clearest picture of market trends. So, how do we use these 2 powerhouse tools to rake in those profits? Let's kick it off with the green moving average lines. Trust me, even without getting super technical, you can easily spot when we're in a bearish trend or a bullish trend just by the way these green lines move. Check this out. Here's a bearish trend and here's a bullish trend. Now look at this. Another bearish trend followed by a bullish trend. If the market isn't giving us these clear formations, then guess what? We're not in a trending market. Easy peasy, right? No tricks, no gimmicks, just straight up facts. But sadly, a lot of beginner traders get caught up in overthinking and complicating trend analysis, which leads to confusion. Alright, now that you've mastered the green moving average lines, let's crank it up a notch. We're going to blend these with Hakanashi candles, taking our analysis to the next level. Alright, let us begin with this section. Here, the formation of the green moving average lines clearly indicates a bullish trend. As we previously discussed, you should now have a thorough understanding of how these green lines represent a bullish trend and how they form a bearish trend. Now we bring Hakanashi into the discussion. What role does it serve in this analysis? The key lies in understanding the Hakanashi price action patterns, which are essential for accurately interpreting market movements using this method. Hakanashi price action patterns. In traditional candlestick charts, there are numerous price action patterns such as the doji, gravestone doji, dragonfly doji, pin bars, and engulfing candlesticks, among many others. However, with Hakanashi bars, we streamline the analysis to 3 principal types of price action patterns. 1. Bullish bars. These are typically blue, with a wick at the top and none at the bottom, indicating a strong upward trend. 2. Bearish bars. These are usually red, with a wick at the bottom and none at the top, signifying a downward trend. 3. Indecision bars. These may appear in either red or blue, with wicks at both the top and bottom, reflecting market indecision. By focusing on these 3 primary patterns, we can reduce market noise and clearly identify trends and potential reversals. 1. Bullish Hakanashi bars. Alright, let's talk about bullish Hakanashi bars. These are easy to identify. Just look for bars with a wick only at the top and none at the bottom. If the bar is moving up with no wick at the bottom and only at the top, that's a clear bullish signal. In this example, we've highlighted the bullish Hakanashi bars in blue. 2. Bearish Hakanashi bars. Now, bearish Hakanashi bars are the exact opposite. They have a wick at the bottom, but none at the top. So, if the bar is heading down, has no wick on top, and there's a wick at the bottom, we recognize this as a bearish signal. In this case, we've marked these bars in red for easy distinction. 3. Indecision Hakanashi bars. Let's move on to indecision Hakanashi bars. These are the bars with wicks on both the top and bottom. It doesn't matter if they're bullish or bearish. If there are wicks on both ends, they're classified as indecision Hakanashi bars. In our example, these can appear in either red or blue. When you see indecision Hakanashi bars, it's time to prepare. Be ready to open positions if a bullish or bearish Hakanashi bar forms, following the rules of our trading strategy. These bars can also serve as a signal to either exit the market or stay in. Now that you have a solid grasp of the green moving average lines and Hakanashi candles for identifying trends in our strength index trading strategy, let's move to key number 3, saying bye-bye to false signals. As I mentioned earlier, if you've been dealing with bad signals, that's about to change. With this strategy, you'll quickly spot those false signals and eliminate them for good. After this, you're going to say goodbye to those false signals. But hold up. In trading, there's no such thing as a holy grail. No signal is ever going to be 100% accurate. No one, and I mean no one, can predict exactly what's going to happen in the market in the next second, minute, hour, day, week, month, or even year. Trading is all about probabilities, not certainties. That's why we need stop losses, profit targets, and of course, money management. Now, let's jump into key number 3, and trust me, it's a game changer. Here's what you need for high probability signals in the strength index trading strategy. First up, the green moving average lines have to show a clear bullish or bearish trend. If you don't see this formation or something similar, this strategy says, hey, there's no clear trend, stay out of the market. Remember, we're hunting for perfect trading signals, so we're not getting tricked by false ones. Next, the RSI line needs to be above the 50 level. I didn't bring up the RSI indicator earlier because it could get confusing, but here's the deal. In this strategy, the RSI shows the strength of the trend, not the direction. So, if the RSI line's above 50, it means the bullish trend is strong. Below 50, the bearish trend is strong. When this happens, you should be on the lookout to time your sell or buy position just right, based on the trend shown by the Hakanashi candles and those green moving average lines. And finally, the rally and pullback phases. This is what you've been waiting for before diving in for a sell or buy entry. Check out this chart. Hakanashi candles turn red, showing a shift from bullish to bearish with those bearish Hakanashi bars. But hold on. This bearish move seems temporary because the indecision Hakanashi bars are followed by bullish Hakanashi bars and the RSI line stays at above 50. So these bullish Hakanashi bars give us a solid buy signal, even though the blue moving average line hasn't crossed the green ones yet. If you're feeling unsure about this early signal, just hold off until that blue line crosses the green moving averages. This is exactly how the strength index trading strategy helps you nail high accuracy trading signals. Stick to the rules. Be disciplined. There's no room for slip-ups if you want to crush it in trading. And finally, key number 4, crystal clear entry and exit points. Alright, here's the deal. Traders can't afford to mess up when jumping into the market, whether it's a buy or sell position. Why? Because if you mess up, you lose money. And if you keep messing up, your whole trading capital, gone. If this were a company, it would be wiped out completely with nothing left. So, I really hope you're getting how serious this is. No more reckless, ruleless decisions when you're entering or exiting the market. Every single move has to be based on well-tested trading rules followed with absolute discipline, no compromises. Now, to stay 100% disciplined when you enter or exit the market, you've got to rely on signals that are crystal clear, consistent, logical, and can't be swayed by opinions or emotions. And guess what? The trading signals we're using in the strength index trading strategy check all those boxes. To make this even easier for you, let's jump right into step number 4 with a case study on a buy entry signal. Let's go. Alright guys, check out this chart. We're diving in right here where the green moving average lines are showing us a super strong bullish trend, like perfectly formed. But wait, there's more. Let's zoom in on the RSI window down below. Look at that line above 50. That's a clear sign the bullish trend is holding strong. Now, things are about to get interesting. The bullish Hakanashi bars turn into bearish Hakanashi bars. And you know what that means. 2 possible outcomes in the market. First, the bullish trend might flip into a bearish trend. Or this could just be a market correction, meaning the bullish trend could come back even stronger after it ends. I hope you're following along because this part is crucial. Look at the Hakanashi bars closely. After 2 bearish Hakanashi bars, the sequence shrinks down to a bearish indecision Hakanashi bar, followed by a small bearish Hakanashi bar, and then it transitions into a bullish indecision Hakanashi bar. Now, If you're an experienced trader, you know this formation is a clear sign that the market is gearing up to continue its bullish trend. And here's why. First, the blue moving average line stays above the green ones, even during the correction. Boom! And second, the RSI line holds strong above the 50 level. This bullish trend is still going strong. At this point, you should totally get what I'm showing you. I've broken this down in a super detailed, clear and straightforward way to make it easy for you to understand. Alright, let's keep going. Next, we get a bullish Hakanashi bar, and you know what that means, a crystal clear buy signal. This is a high probability buy, and I'm super confident that if you spot this formation like I just described, especially in the first wave of the trend, you've got a massive opportunity for huge profits by opening a position with this strategy. Now let's talk about stop loss placement. You've got two options. First, put your stop loss below the green moving average lines for a buy and above them for a sell, or go with the second option, below the nearest swing low for a buy and above the nearest swing high for a sell. It depends on where the price is when you enter. I broke this all down in last week's video, the mother of all indicators. I'll drop the link at the end and in the description. You need to check it out. It's a game changer. Alright, the same rules apply when we're looking for a sell signal, but flipped. Take a look at this chart and you'll see it's super clear. Those green moving average lines, they're screaming strong bearish trend, and these bearish Hakanashi bars, they confirm that the market is really truly bearish right now. Plus check out the RSI line below the 50 level, telling us that this bearish trend is no joke. It's strong. Now, when those bearish Hakanashi bars shift into bullish Hakanashi bars, we've got two possible outcomes. First, the bearish trend could flip into a bullish trend, or second, we could be in a rally phase, meaning the bearish trend might just pick right back up after this temporary price hike ends. But here's where it gets exciting. We start to see signs that this little bullish trend is about to run out of steam. How? With the bullish indecision Hakanashi bar, followed by a bearish Hakanashi bar. Boom! There's your clue. Another big confirmation is the RSI line staying below the 50 level. This tells us the market still has plenty of muscle to keep that strong bearish trend going. So, this is a legit sell entry signal, folks. You can jump into a sell because the blue moving average line is now chilling below the bearish green moving average lines. Coming up, I'll walk you through how to set your exit points in a way that makes sense. No guesswork, just solid, disciplined moves. So stick around for that. Alright guys, we're about to dive into how to nail your exit points like a pro. Now, unlike traditional candlestick strategies, we're using the trend index trading strategy with Hakanashi bars. Here's the deal. When you're in a buy scenario, the moment those bullish Hakanashi bars flip to bearish, or even to a bearish indecision bar, it's time to exit the market on the next candle. And for a sell scenario, it's just the opposite. Exit when the bearish bars turn bullish, or into a bullish indecision bar. Simple, right? Now let's check out a real example. Boom! Here's a chart. This bullish Hakanashi bar, that's our buy signal, and we place our stop loss right below the red moving average line. And then we see two indecision bars. Normally we'd exit, but since we're just starting, we stick to the initial stop loss. We exit when a bearish Hakanashi bar forms, right here. Next, let's jump to a sell example. Following the same rules, this bearish Hakanashi bar signals our sell entry with the stop loss above the red line. The price drops and we exit here after a bullish Hakanashi bar shows up. Simple. But wait, we get another bearish bar, and with the RSI still under 50, the bearish trend is strong. Stop loss goes above the red line, the price drops again, and we exit when a bullish indecision bar forms. Easy. So there you have it, folks, crystal clear and ready to apply. Be disciplined, follow these steps exactly, and only enter when the market gives you that perfect signal. Patience pays, don't rush it. Now, if you want to set this up super easily, grab the template in the description. It'll plot everything perfectly so you don't have to lift a finger. And for maximizing profits, check out my video on the mother of all indicators. Trust me, you don't want to miss it. Click the video right here and I'll see you there. Braham! That's how we do it!